Hey folks, with rising consumer debt, I thought it'd be a great idea to introduce a video on credit scores. Equifax and TransUnion have this black box algorithm that nobody understands, and I thought it'd be a good idea to let you know what 5 components make up the credit score and how you can utilize those components to make sure you maximize the best score you can. I hope you enjoy it. Today's high consumer debt load has caused a lot of folks to ask why their credit scores are going down. And the reality is the credit score, or beacon score as is used in the industry, is made up of 5 components. Those 5 components are made up of the following. Payment history represents 35% of the score. Utilization represents 30% of the score. The credit history of the client represents 15%. New inquiries represents 10%. And the last 10% is made up of the mix of credit facilities on your report. What I want to talk about today is utilization. As consumer debt has grown, utilization has been a category that's been under a lot of concern for folks, because utilization, making up 30% of your score, is starting to see that component drop. As folks owe more money on their credit cards relative to their credit limit, their utilization score is impacted. Let me explain. If you have a $10,000 credit limit and you owe only $1,000, that 10% utilization of that limit is ideal. Anything under 30% utilization is very good. You want to try to target 10%, but you don't want to be carrying regular balances over this amount. When you start creeping up to 75, 80%, 90% of your credit limit, your score is impacted negatively. So it's incumbent on people to keep track of what you owe relative to your credit limit, because that utilization component makes up a big chunk of your score at 30%. The other one is payment history. Payment history, making up 35% of your score, is critical that you are making your payments on time. Take advantage of the auto payment to your credit card if your credit card and bank offers that option, because it eliminates any missed payments. A missed payment, when you have high utilization, the algorithm basically compounds the negative impact to your score, and it's just not good news. So you have to start taking advantage of the tools that are there to help you maintain good credit scores. On the utilization front, one thing I should add, if you are achieving a utilization rate over 50, 60%, contact your credit card company and ask them to increase your limit so your utilization is a lower percentage of your limit. But please don't take advantage of the full limit. It's more to manage that score and help you get the best mortgage rates in the marketplace, because the credit score is still a major component when qualifying for prime mortgage rates. Hopefully that helps, and if you do have any questions, feel free to reach out. We'll walk you through the whole mortgage approval process and any questions regarding your credit score. Thanks. I hope you enjoyed this informative video, and remember, I read all the comments, so if you have something to add, you have some insights, some feedback, please share it. I read them all, and I really value your input. And if you're ever in the area, don't forget to drop in for a free espresso.